What is going on, guys? It is Jay back with another banger video. And if you give me just 15 minutes of your time, I'm going to give you a $10,000 a month day trading strategy that is super easy. I'm going to show you step by step. And it's very important that you watch this video to the end because we are going to do some live examples on the chart at the end so you can really understand this on a super high level. And so no long boring intro. Let's just get right into it, guys. Okay, guys, so to really understand this strategy, the first thing we need to understand is what 99% of traders are doing wrong and what you're probably doing wrong if you're not making $10,000 a month. Because if you weren't doing these things wrong, you would be making 10K, right? So let's kind of understand this. So the first thing that I have here is you guys aren't looking for any high time frame context, okay? Every single trader that isn't making consistent money with trading, or isn't being able to pass evals every time, or being able to get consistently paid out every time, is because they don't have high time frame narrative going into the market every single day. It is so important that you understand what the high time frame is doing so you can actually get directional bias. And I promise you, if you go into the market every single morning with high time frame narrative and you're looking for the direction of the high time frame, you're looking for these different draws and liquidity, everything becomes super easy. And then the second thing I have here is no set framework on when to take entries. A lot of you guys are seeing price come into your key level and you're still getting stopped out, and then price is going right to your take profit. I know that happens to a lot of you guys where it's like everything is right, but you somehow are getting stopped out and then it's running your take profit, or you're getting broke even and it's running your take profit. And that's because you're not taking your entries at the right point. And it's so important that you have framework to follow so that you can have precise entries every single time. Third thing here is random targets on their trades, right? That is a big reason on why a lot of traders end up getting broke even on their trade, is because they don't know where they're targeting. They're just throwing it to a set risk reward because they want to make X amount of money per trade. And the moment you stop doing that is when you actually start pulling payouts from these firms. You actually start passing accounts every single time, and you actually have consistent trading every single morning. And so you cannot have random targets, and that's exactly what this strategy is going to fix. Is you're going to be able to target the same thing every single time. And so this strategy is super repeatable and super simple. You're never guessing. Like I said, 3-step process. We have step 1, step 2, and step 3. Let's go ahead and get right into step 1. Okay, so when it comes to step 1, it's very important that you guys are paying attention here, because if you cannot understand this, you're not going to be able to understand step 2 and step 3. So the first thing we need to do is look at the high time frame and gain a directional bias for the session, right? So we're going to be looking at the time frames, 1 hour to about the daily time for the one day typically. So the things that we're looking at is, okay, trend, okay? Is price action bearish or bullish? But another thing that a lot of traders overlook and is overextension, right? When's the last time we've actually had, a solid retracement in the market, right? Because now we understand that yes, price is bullish, but we know price is going to need to come back down to rebalance this range back down in here. And so if this is on the daily, if we're too extended on the daily time frame, we know that this day is more than likely going to be bearish, even though price action directionally, is in an uptrend, right? So it is important that we're looking at high time frame structure to gain, directional bias for that session. Personally, how I trade and how my students trade is we trade for about 30 minutes in market open, and then we're done. If we don't see our setup within 30 minutes, we're done. And that's exactly why me and my students are able to succeed, is because we have this process to follow, right? And as well as they have access to a bunch of these different vault recordings that break this down, and other strategies super easy as well. So it just makes it much easier. But I digress. Time frames to use, again, we just kind of talked about this: daily, 4 hour, 1 hour. So the last part to step 1 is we are looking for trend and delivery of the market and points of interest at market open. So I want you guys to understand market open. This is a market open strategy. You're going to be trading right at New York open. We're catching the move right out of open. So it's very important that leading right up into open, where is the nearest point of interest? Where's the nearest draw on liquidity? What gap needs to be filled? Okay, is it London high need to be taken, or does London low need to be taken? Things like that. We're looking for the nearest point of interest so that we can actually catch the market open breakout. So step 2 is also very important. Again, they all feed into each other together. So step 2, we need to identify the nearest draw on liquidity. So this ties back into this part here. So not only point of interest, right? Because a point of interest, this could be whatever, gap needs to be filled. That could just be very generalized. Okay. The second step is we need to identify the nearest draw on liquidity. Okay. Is London high the nearest draw on liquidity? Do we have a 15-minute prominent high, 15-minute prominent low? Where is that nearest draw on liquidity in the high time frame? Because this is also going to help with the direction on, where we want to actually target, or potential where we actually want to trade to on that market open breakout. Okay. So step 2. Once we have our draw on liquidity, we wait for the market to open, and we have a low time frame breakout towards the draw on liquidity, right? So to give you an example, what that's going to look like is I kind of did a little bit of a drawing back there, but let's say pre-market price comes down, we take some sort of liquidity level, and the next liquidity level is London session high up here. Bang, right? London session high. What we want to see is on the 1 minute time frame. We trade this on the 1 minute time frame. It's very important that you understand this. The 1 minute time frame, we want to draw some sort of trend line over the top, and we want to see price action break that right at market open. We're going to tag in here, and then we're going to target that London session high. Okay, so this is a basis understanding here. Let's look at step 3 here. So step 3, take entry, and you have your stop loss at the 1 minute recent high or recent low, okay? And the reason we always have it the recent high or low is because we understand when price action breaks the recent high or low, you know, our trade idea is invalid, and we no longer want to stay in a trade when our trade's invalid, right? That's just simple, right? Because you're just going to get fucked over every time. And so to kind of come back to this drawing here, you know, if you get tagged in here, your stop loss would be resting just below here. And obviously if price sinks you there, you know that your trade idea was invalid and you need to review it and journal it. That's what I have all my students do, is they journal and recap their trade every day. Take your profit at the next draw on liquidity. So this is where you're going to tag out, is going to be London high in this scenario. Again, you know, this is just a drawing form. There is way more that goes into it. And so that's why we're about to do some live trading examples, and we are going to hop right in. Okay, guys, so let's go ahead and take a look at this example here. So I have NASDAQ here on the left, the S&P on the right here. So essentially the first thing that we're supposed to look at is we're supposed to get our directional bias. So that's exactly what I'm doing here. So essentially what I'm seeing, you know, the first thing that I'm noticing right off the bat is price action had came down on this push lower and taken out all of these lows, which obviously caused price action to have, you know, a pretty big impulsive move higher here. We were bullish from about Tuesday the 8th until about the 10th. So about a 2-day stint of really, really bullish price action. And price action started to fade lower. We're actually kind of, you know, rebalancing this price range here. You can see down from low to high, you can see price action is trading inside of the discount right now. We had recently come down and taken this level here, which caused price action to kind of push and break above these highs here. This does look like bullish price to me. This would be kind of a longer term point of interest here. Looking at the S&P, yeah, same thing. You know, this would be a longer term point of interest. And then, you know, as far as, you know, what I can see here is if we bring back price action just a little bit, on the 15-minute time frame, you can see about 5:45, my market opens here at about 6:30 a.m. I'm in Arizona. So what I ideally would want to see here is if we give it a few 15-minute candles, you can see price action is starting to fade lower, but mind you, I'm bullish, right? So we had just taken this high, and that's actually what's causing, you know, price action. We had taken both of these highs. We had taken this high here on the left, and then we had taken this high here on the right. So that's actually what's causing, you know, this candle to close back about 55 points off the top. And we're actually starting to fade back lower here. So essentially, you know, kind of what I would want to see is liquidity kind of get tagged up around here. And then I would just want to see a push right back up into this 45 high. That would be, to me, the nearest draw on liquidity if we can, you know, kind of see something similar to that. But we can see market opens right here at about 6:30. We did not quite break out of this resistance, guys. We know that step 3 is we need to see that resistance. Well, in this case, the resistance being broken because we are looking for buys. So I would want to see this level be broken. You can see we come down. We, you know, kind of tag up this low that I had marked out. We sweep these, you know, lows here, this low here. And so ideally I'd want to see a breakout, and I've identified the point, the nearest draw on liquidity because we are bullish. I'd want to see this high get taken. And so I'd be looking to take a breakout right here if we can see price breakout to the upside. So if I see something like this, I'd still want to see a break of this, you know, resistance here. And so as soon as I see this candle close through, that would be my, you know, my framework to take my entry, because I am looking for a breakout here. And you can see we're starting to break out of this resistance here. I'd have my stop loss just below this 1 minute fair value gap. And then I would target back up to that liquidity level for just about a 1.5 risk to reward. So let's see how this plays out. Fucking my gosh, we see it? Look at this sunset. W trade though. That just distracted me, but yeah, W trade, man. Okay, and then before we get into the next one, if you guys do want to grab an exclusive live recording of me hosting one of my group mentorship classes, A lot of sauce dropped in. I'm not going to lie. I can't believe it. I'm dropping it for free, but you can click the first link in the description to snag that. It's completely free. There's no pitch or anything behind it. It's completely free if you want to snag that group recording. Okay, guys, so we actually have a bearish trade example here. So, again, first thing that we need to look at, let me delete that from last example. First thing that we need to look at is we need to find directional bias. We're trying to find long-term high time frame points of interest. Where does high time frame price want to actually draw to? So what you can see here is price action was accumulating kind of around the 9th. We're now looking at the 12th here. You see price action was kind of accumulating. We did break below these lows. A lot of people would be bullish here. And the reason why I wouldn't be bullish, because a lot of people would say, okay, we accumulated. We just manipulated the bottom of this range. Price action was already prior bullish. I want to see expansion towards the high, but I'll tell you exactly why I wouldn't want to see expansion yet. This price leg to me is still really extended. And if we take, you know, our, if we measure low to high, you can see we're still pretty far away from this equilibrium from the 0.5. And so I'd want to see price action, you know, I'd be bearish until we take this 0.5. And so like this here would be like a major draw on liquidity, as well as you can see we did just fill this inefficiency here. And so I would be looking for price action to be bearish down through this low back into this 0.5. And so immediately, you know, looking at, you know, this 8 p.m. low would definitely be my draw on liquidity for the day for sure. We are about 5 a.m. so market opens here in just about an hour. So like this would be my draw on liquidity for sure, as I want to see price action drop down into there. Looking at the 15-minute time frame, see what we can see. Do we have some T's up here? No SMTs, 545. Let's bring it closer to open. So yeah, you can see price action just fucking dropping here at about 615. So yeah, to me, like this is the nearest draw on liquidity. You can see price action just kind of rebalanced back into here. You know, this high here, that looks promising. We got like a 30-point close off the top. Okay, like to me, this is not enough for me to take this. I'd have to see something more so like this. Trading higher. Okay, we come back up and take these equal highs here. This actually looks really, really good. If we can see some sort of impulsive move lower, that would look solid. So yeah, if we can see a break below these lows here, if we can trade below these lows, I'd hop in this, you know, short. I don't really see anything. We'd already taken this high here. We had a good drop. We had a retrace here. I'd be looking for lower here for sure. I don't like that. That's money. I'm in this. So that's pretty solid. We came back after we wicked it the first time. Stop above this high, and again, I'm targeting that draw. Oops, wrong fucking position tool. I would look for that draw, and then I would probably look to break even at AM low. Let's see how this plays. Money bag shit, dude. So fucking simple. This shit's so saucy. That is genuinely how easy it can be, is if you just pay attention to market open. I'm telling you guys, a lot of people will tell you don't trade market open, it's gambling. No, if you understand how to read the market on a high level, market open is the most effective way of trading. Okay, it also is the best for your emotions, because what typically a lot of people do is they'll sit there and wait for 30-45 minutes. They'll get anxious and take a stupid trade. If I don't see my move at open, I am getting off. Okay guys, and I made the promise to you guys at the start of the video that I was going to give, if you gave me just 15 minutes, I was going to show you a banger strategy that you can make $10,000 next month with if you really lock into this. Backtest it, practice it, and make sure you watch the rest of my videos, because you can add context to this and actually kind of, you know, make it into your own strategy, make improvements to it, things like that, because you should never just be trading copy and paste, but you should take my framework and apply it to your trading. But I appreciate you guys for making it this far in the video. Remember, if you do want to snag that free group recording, which it's free sauce, it's exclusive, it's only the mentorship students, so I linked that recording in the first link in the description, as well as make sure you comment down below what video you want to see next from me, and then make sure you like, subscribe, because I am, you know, going to be dropping a lot of bangers up coming up here pretty soon. And I also have a pretty big announcement coming up pretty soon, so you're not going to want to miss it. And yeah, guys, I will catch you guys in the next video. Peace.